Hi, my name is Khan and welcome to the new chapter. In this chapter, I'm going to teach you that how we can identify lower time frame entry using 4-hour CRT. In this chapter, I'm going to teach you step by step process that how we can trade each and every candle in a 4-hour time frame and which time frame we need to trade and what criteria we should follow in a higher time frame and lower time frame. And also main part is here that which time frame we should use in a lower time frame for the entry, how we can set the stop loss and take profit. And another thing is here that how we can trade in a continuation pattern and reversal pattern in a 4-hour CRT module. So everything will be clear step by step. Let me show you here in a bearish market first, then I will show you exactly what happened in a bullish market and what criteria we should follow to marking any kind of like structure in a lower time frame based on 4-hour time frame candle range theory. 4-hour time frame candle range theory is generally we use for the because once market create 4-hour time frame candlestick, then market rapidly push higher and lower where we can buy and sell based on 1 minute, 2 minute and even 5 minute time frame basis. But generally I will teach you that this time frame is a best for you. First let me understand here why trend, then I will show you on chart, then you can get more clarity. In this case we can see here that candle A close here and this is our baseline right here. So once market candle close here and we are looking for the continuation because the previous day market looking for the sell. This is our 4-hour time frame candlestick here and this is our baseline. It means the last 4-hour time frame market continue falling. That means the next upcoming 4-hour probability is here that market continue fall will be continue in a downside. So what will be processed in a lower time frame? So this is our 4-hour time frame candlestick and this is our 5-minute structure right here. So this is our 4-hour time frame candlestick here and this is our 5-minute structure and 5-minute structure showing bearish momentum right here. And what we are expecting next in upcoming 4-hour, when market open here, this is our baseline and this is our liquidity sweep, which one is here right here. Okay, so this is our shadow of the previous candle is here, so that's why this one I create looks like this one and market close here. So we need to wait for it what happening next here. If price stayed above the baseline, so we are expecting that market looking for the continuation, market looking for the reversal to the upside. And one more thing is here that if market not able to push higher and just taken out the previous high, which one is here. So once market taken out the previous high and market push downside, take a pullback and we can plan for the sell in a downside, and this is applicable in a continuation move to the downside. And what happened here after this one, for example candle B close here and create market one more baseline, which one is here. The what will be next C candle is here. The process will be similar as I told you here recently. Same process will be applicable in a candle C, that if market looking for the continuation, then what happened here, market should be taken out of the inducement, then we can plan for the sell in a downside right here. And this inducement taken out and this can be sweep and can be closing. In each and every situation both are valid here, but after taking out the inducement, price should be pushed downside in a first attempt. If market take a time here, then chances is here that market can reverse to the upside. So how it work in a reversal trend? In a reversal trend, if market close here for example and we mark them as a inducement right here, once market taken out this one, so we are looking for the sell. So what happen next after this one? If market trying to go higher and taken out this one, and we are expecting that market looking for the sell, but what happened here, market take a pullback and later what happened here, market take a pullback again, going higher high is here, again going higher high like this one. It means market not able to push downside and market just trying to go higher. So we can expect that market looking for the reversal and we can plan here for the buy after taking out this inducement right here. So once market taken out the inducement, we can mark them as a high time frame PY, and once price tap on it and we can plan for the buy to the upside. And same thing applicable here right here. Once price broke it and mitigate this order flow, so we can plan for the sell. Same principle applicable right here. So once price tap on this high time frame PY, you need to switch here in a 2-minute time frame to see exactly what happening here. And when price tap on it, we can apply entry here with inducement, without inducement. Sometime market sweep the inducement and sometime not sweep the inducement. So we can plan for the buy or sell using the entry module. As I teach you in a previous chapter that how we can take entry in a lower time frame. Same entry tap applicable at this point when price tap on higher time frame PY. This time we are using 5-minute as a high time frame PY. We can switch back here in a 2-minute time frame to find the entry in a lower time frame. So this is exact process that how market is working here in a continuation pattern and reversal pattern. And one more thing is here important for you, that what happens sometime market break the previous candle low here and then market looking for the reversal. So what will be condition in that case? And sometime what happen, for example candle B is here and this low is here. Next upcoming 4 hour we are expecting market looking for the continuation in a downside. But what happened in this case? We are expecting that price taken out this inducement and then we are looking for the sell right here. But you need to understand here, if this low is a broken and this one is a sweep, or maybe you need to understand here that if market trying to go lower and later what happened here, market push downside and taken out this low is here. If this low is a sweep here and looking for the reversal and go upside, so that means the probability is here that market looking for the buy. This low act like a liquidity sweep here, and we are expecting that market can continue to go higher, and we can mark them as a PY. This is our higher time frame PY, and we can plan for the buy to the upside and also price trading above the baseline right here. Main thing is here that market sweep the previous low. In the previous 4-hour candle low is a taken out, which act like a liquidity. Then market create here in a higher time frame, means the 5-minute time frame create bullish structure formation, so we can plan for the buy. In some cases market sweep the previous low, and other cases market taken out the inducement. In both cases we can use them as a higher time frame POI. We can use higher time frame POI and we can plan for the buy. For example, this one is a not a sweep here, this one is just closing, so we can mark them as a inducement right here. Market push downside, take a pullback and go higher, and we can plan for the buy to the upside right here. So this zone act like a higher time frame PY. We can switch back here in a 2-minute time frame. Then we can take entry right. So this is a complete process that how we can take entry in a bearish market for the reversal and continuation, and what will be processed in a lower time frame. Now I'm going to show you what happening in a bullish market, because these are all happening in a bearish market. But when you switch in a bullish market, the process will be similar. The things become just opposite of the bearish market. Let's see. In a bullish market, process will be similar as I told you in a bearish market. Same thing happening here. Candle A close here and we mark them as a baseline. And once market close here, it means the structure showing bullish here. And when market taking out the inducement, which one is here? After taking out this one, what we are planning here? We are planning here for the buy or unmitigated order flow. Where is the order flow? This one is here. You can buy here, and this is our 5-minute structure, and this is our higher time frame, means the 5-minute is a PY, and we can switch here in a 2-minute time frame for to find the entry in a lower time frame, so we can plan for the buy to the upside. And same thing applicable here again. Market continue falling upside, taking out the inducement. This is our order flow in a higher time frame, and this process will be continue. If market continue going higher high and higher high, we can identify higher time frame PY in a 5-minute, and we can switch back here in a 2-minute, find the entry in a lower time frame, and we can set the stop loss and target as per the plan. And also you can set the target the previous candle height, which I will teach you on a chart. And what happen here if market continue going upside and looking for the reversal, because we don't know which time market can change bullish to bearish. So here also two possible scenario here. First one is here market sweep the previous high, and second one is here if market trade the below the baseline right here. So if market continue going higher high is here, these are bullishness. This time market taken out the inducement, still we are planning for the buy. But this time market not able to break the previous high, just break this low and like this one. That means the liquidity is taken out. Once market taken out the liquidity, we can plan for the sell right here on this order flow. If market taken out this high is here, sweep this one, push downside, it means we can plan for the buy on sell, just taking out the inducement in a higher time frame, means the 5-minute time frame. We are using H4 CRT, so we need to switch back here in a 5-minute to find the higher time frame PY, and we can set the target based on previous candle height and previous structure, and also we can set based on Fibonacci tool. You will get very aggressive entry for the buy and sell. Immediately you will get stop loss, take profit, break even, everything. And one more thing I want to mention here, when you trade in a 4-hour time frame CRT, you need to trade during London and New York session. If you trade in a Sydney and Asian session, then highly chances the market create very low volume and not able to push upside and downside as you predict and as you forecast. But when you trade during London and New York session, market gives very aggressive move to the upside and downside as we are expectation. So this is a thing you need to understand. While you trading in a 4-hour time frame candle range theory, you need to trade during London and New York session only, because this time market create very high volume. This is a baby pips site here, and you can visit on this site. Then you can find the market hours here. You can simply go in our tool section and market hours. You can see here, you will get this is a zone which time market create high volume. You can see here, this is Sydney, Tokyo, London and New York. So this is a time zone right here, and as per your time zone this will be as per your time zone you can set here, otherwise it automatically detect here. So we can see here that this time market get very low. You can see here this is a low volume right now is here. So when market open London session, then you will see how market change into low to high, and this time market reach on peak point when market overlap New York and London session, which one is here. That's why I suggest you to trade during London and New York session while we are using CRT module in a 4-hour time frame. Now I'm going to show you on chart that how we can identify the higher time frame PUI and how we can get entry in a lower time frame. Let's see. Now this is our 4-hour time frame structure, and we can see here as per the current prices here, what are you looking here? We can say that market create strong bullish candlestick formation here, which means the next 4 hour we are expecting market will be bullish. And one more confirmation is here, we can see that market taken out the previous candle low, which act like a liquidity. That means market already taken out the liquidity in a 4-hour time frame. So we are expecting that market continue fall, market continue follow in a bullish trend. And if market create in a lower time frame structure, so we can plan for the buy to the upside. As I told you recently that if market momentum is a bullish, then market continue going higher high, market just taken out the investment, so we can plan for the buy to the upside, but price should be close above the baseline, so we can plan for the buy to the upside. Now I'm going to show you exactly what happened here in a 5-minute time frame and what is the next step here. In this case, we can see here that market momentum is a continue going upside, creating higher high is here, and in the lower time frame we can see here also market taken out the previous low is here. It means this is our internal structure. So if market create here any kind of like bullish formation, so we can take risk for the buy and sell, but price should be close above the baseline. Okay, so this is our price close here, and we can draw a line. This is our baseline. It means that if price trade above this one, so we can take entry for the buy. If price trade below this baseline, so we are interested for the sell in a downside. So let's see what happens next after this one, and we can see here that how price is reacting aggressively and price trying to go higher and higher. Look at this one. In this case, we can see here once market break this baseline and price trade above the baseline, so after taking out this liquidity is here, what happening here? We can see first highs are broken and we can expect some buy side, because this is our order flow right here. So once price tap on it, we can plan for the buy to the upside after mitigation this zone right here. If in a lower time frame market create here any kind of like buy structure, so we can take entry here for the buy, otherwise no. Okay, and one more time, what happened here? Market create one more structure here, which one is the grab the liquidity here. So if market grab the liquidity, so we can mark them as a entire zone as a order flow. It means in a future, if market tap on it, so we can also plan here for the buy to the upside, but we need lower time frame confirmation as well as before to buy to the upside. So let's see what happens next after this one. Okay, price trying to push downside and mitigate our zone right here. And one more thing I want to mention here, that if you are thinking why we are not considering this order flow right here, of course we can this one, but look at the like is here. In this case, we can see here this is our like this one more pullback, push downside, liquidity taken out. This is the entire zone right here. This is a small move like this one between the previous high and previous low. Again market going higher high, can go higher high. It means technically this is our entire zone right here, and this is a part of this one, so we can use this one as a refinement as well as, but in this case we can say this is also a good zone for the buy. So if price tap on it and create here any kind of like bullish structure, so we can take entry here for the buy. If not create here any kind of like entry, so we can move on this PY. Once price tap on it and create here any kind of like lower time frame entry, so we can plan for the buy to the upside. So let's see what happens next here in a lower time frame. This is our 5-minute structure, and we can switch here in a 2-minute time frame. So this is our 1-minute structure, and we can use 1 minute and 2 minute for the better confirmation. But in a 1-minute time frame is as per the 5-minute time frame, this is a good time frame. But while we are using 15-minute time frame, so we can take 2-minute time frame. Even in this case also you can use 2-minute time frame, but sometime what happen, market not create structure as per your plan. So I will suggest you, while we are marking the 50-minute time frame as per the higher time frame, so we can use 2 minute as a lower time frame. But when we mark the higher time frame 5 minute, then we can switch back in a 1-minute time frame for the anti confirmation. But if you wish to buy directly without any lower time frame, then you can buy directly in a 5-minute time frame. Now I'm going to show you here in a each time frame, like 1-minute time frame and 2-minute time frame, and what will be difference in a entry and stop loss and take profit, everything. Let's see. If we switch here in a 1-minute time frame, then you can see this is our first POI is here, which I mark here. This area grab the liquidity and press above the baseline as per the mitigation, and we are planning here for the buy to the upside. In this case, we can see here once price tap on it, there is any kind of like bullish structure formation create here, yes or no. Right now we can see here the structure mitigate this zone, right? So once price mitigate this one, in the left side there is no unmitigated order flow available here, so we are not interested here for the buy. Second thing is here, if there is no order flow available, then market should be create a bullish structure, so we can take entry for the buy to the upside. Later what happened here? Market trying to go higher at this point right here. Again what happened? Market push higher. Again higher high. Taken out the investment. After taking out the investment, if price close of it, mean the this structure high of it, so we can take entry for the buy to the upside. But what happened here? Market not able to create here bullish structure, push downside, break the main low again. When market sweep this low is here, so what are you expecting here? We are expecting that if market taken out the low, so we are planning for the buy for the next step right here. Later what happened here? First high is a broken. After broken the first high, this low is a broken here as well as here. And after this, what are you expecting here? We are expecting if market broke it and close of it, we can take entry here. So of course we can get entry here, put the stop loss just below this structure here. And where is the target? Target we can set based on previous candle height, and also we can set based on a Fibonacci tool. If we mark from Fibonacci top to bottom right here, so we can get 1.618. This one is our target right here, and you will get almost 3.8 RR. So this is our first entry, that how we can take entry here. I hope everything is clear till now. Let me repeat this one again here. First thing is here, let me show you here in a 5-minute time frame again first. This was a previous low, is a taken out, break the structure, push downside, mitigate this zone. We are again looking for the buy, but this low is not broken. That means price trading between this zone right here. So if anything create here any bullish structure formation, so we can take risk here for the buy. Also price trading above the baseline, that means the chance is higher that market continue go higher. Again sweep this low. Once market sweep this low, we can switch back here in a lower time frame, and we can get entry here in a lower time frame. So same thing applicable here in a 1-minute time frame. While market sweep it and create higher high, taking out this low is here, push upside, close of it, and we can take entry here, put the stop loss just below this structure, and we can get in here. Another entry is here, break the main structure here and broke the previous high, which one is here, close of it. Once market mitigate this zone right here, this is our larger zone. This is our larger zone. Once price tap on it, and we need to wait for it, same structure like this one, so we can get entry, otherwise no. In this case, we can see here how price reacting. If I zoom this part right here, then you can get more better clarity here. Previous low is a sweep here, high is a broken. Once market sweep the previous low, which one is here, after that what happened? Break it and push downside, and we are expecting that we can plan here for the buy to the upside. Why we are interested here for the buy? Because price trade on this demand zone right here and create here bullish structure, and also tap on this unmitigated order flow right here. So we have a multiple confirmation here for the buy, and also price in a bullish trend right here. So if market create here any kind of like bullish structure formation, so we can take entry here and put the stop loss just below it. This is a safer, no, little bit increase just below it, so we can extend target till this low. So this is our entry right here, and where is the stop loss? And this is a stop loss, and this is our entry after candle closing. Next candle pullback, we can immediately buy here, put the stop loss here, and put the set the target right here. In this case, you will get also similar target for RR. So this is entry here, that how we can take entry after this one. Again what happened here? Market again taken out the investment, we can get one more entry here. So below this low, if market create here any kind of like bullish structure, so we can get one more entry here, and we can add multiple position here to the buy to the upside. And let's see what happens next after this one, and how price reacting. In this case, we can see here market not create here any kind of like bullish opportunity, and what happened later? Market hit our take profit right here. So we can see here how price smoothly push higher and go upside very rapidly to the upside. So this is a complete process, that how we can get entry using 4-hour time frame turn into 5-minute as a higher time frame. And when we switch in a lower time frame, so what process will be applicable while we are looking for the buy to the upside? Let me show you a few more examples, then you can get more better idea. And one more thing I want to mention here, that if you look to buy here based on 2-minute time frame, then which entry you will get here, and based on 5-minute time frame, which entry you will get, and what will be risk reward. Let me explain one more time as here, which is very important, you need to know. Then you can get idea that which time frame is suitable for you, and which time frame you will get more entry, stop loss, and risk reward, everything. In this case, we can say once market sweep this one, so the 2-minute, once market sweep this low, you can get this entry here based on 2-minute time frame. It means you can enter here based on 2-minute and 1-minute, both entry are valid at this point right here. So this is a common point when we can buy to the upside in a 1-minute time frame and 2-minute time frame. If you see here based on 5-minute time frame, where is the structure and when we can take in? If you follow the based on 5-minute time frame, so this low taking out the liquidity, this is the mitigation here, put the stop loss just below this low, and where's target? Target should be same here. So in this case, you will get almost 2.2 RR. It means you can see difference between the risk reward. When you switch back in a lower time frame, then you can reduce our risk and maximize our reward. It means the total risk reward will be higher compared to the higher time frame. It doesn't mean that you need to use every time lower time frame and lower time frame always great. No, I'm just showing you difference between the higher time frame to lower time frame, what you will get if you take risk in a lower time frame. And sometimes what happen in a lower time frame, market hit stop loss and then market hit also take profit. But when you trade same trade in a higher time frame, then what happen, you are standing on your position and later what happen, market hit our take profit, because what happening in a lower time frame doesn't matter for us if you trading in a higher time frame directly. So these are pros and cons in a lower time frame and a higher time frame. In a higher time frame, you will get a small risk reward, but the execution of the probability is higher compared to the lower. But when you switch in a lower time frame, take entry, then you will get big risk reward compared to the higher time frame. So these are pros and cons. So you need to take trade as per your plan, that which time frame is suitable for you. It doesn't mean that every time you need 1 minute, 2 minute and 5 minute time frame. It totally depends on you, that you can also trade based on 50-minute time frame as well as. But this 4-hour candle range theory explanation for aggressive buyers and sellers in a day trading. After creating 4-hour time frame candle, market rapidly push higher and lower. Now I'm going to show you a few more examples, then you can get more better idea that what happening in a 4-hour time frame candle in a bullish market, in a reversal market. In this case, we can say that market momentum is a bullish here, and we can see here the market taken out the previous candle low is here, is taken out the liquidity, same thing as it did here. So if market taken out the liquidity and market create strong bullish candlestick formation here, so what we can expect here in the next 4-hour time frame, we can expect that market looking for the continuation and price going higher high, because market momentum is extremely bullish here. So we are expecting that if market create here any kind of like bullish structure and trade above the baseline, so we can plan for the buy to the upside. Let's switch here in a 5-minute time frame to see exactly what happening here and how we can trade here. So this is our baseline and market close here. It means the next market open here in the next 4 hour and market create here any kind of like bullish structure, so we can take entry here for the buy to the upside. In this case, we can say here generally market trying to go higher and higher. At this point, what happened here, market taken out the liquidity is here but not able to break this one. Again market trying to push downside, and what happening here, in this case, we are expecting that if market taken out this low is here, we are willing to buy after break this one. Previous low is sweep here, market close above it, so we can take entry here for the buy. In this case, we can see here clearly what happening here. This candle close here, and once market close here, it means this is an indication that market looking for the continuation to the upside, because market taken out the liquidity, which one is here, and price trading above the baseline, which is a good indication here for the buy to the upside. So in this case, we are planning here for the buy to the upside right here. And one more thing is here, if you can see timing of the session, so we are trading in a London session right here. So this is a right now London session, and you can use any trading session indicator to understand which time market open London and New York session. So this is our candle closing right here, and if we switch back here in a lower time frame, so you can get entry here for the buy to the upside. If there is no entry possible here, so you can leave them. Let's see what happening here in a lower time frame. Let me switch back here in a 1-minute time frame. In this case, we can see here clearly once price close of it, then what happened here, this is our first high is a broken and second high is a broken. This low is a taken out, this low act like a inducement, means the liquidity is a taken out in a lower time frame as well as here. This is our entire zone which act like a PY, and when price tap on it, and we can plan here for the buy at this point right here. Put the stop loss just below it. And where's target? Target generally we can set based on Fibonacci tool. Let's see what happens next after this one. This is our previous swing high and previous swing low. Where is the target? 1.618. In this case, if target is below the 2RR, so you can extend 2.618 right here. So you will get almost 4RR risk reward right here. So this is our entry and this is our stop loss, and this is the complete logic behind this trade right here. Everything is perfect till now. And let's see what happens next after this one and how price reacting in this case. Okay, market trying to push downside, again go higher, and let's see what happens next after this one. Okay, so when price going upside continue like this one, so what we are expecting here, we are expecting that if market continue going higher high and higher high, and once market taken out the inducement and then again go higher, so we can move our stop loss on a break even. But in this case, there is no chance here right now to move with stop loss on break even. But if this move push higher like this one, again going higher high, so we can move our stop loss like this one. Again market taken out the up, we can move stop loss like this one, like this one. Okay, so you can trail our stop loss like this one. When trade continue going higher high and higher high, you need to wait for it to take out the investment, then move our stop loss till take profit hit. Okay, so let's see what happens next after this one. And we can see here that market trying to go higher. After taking out this liquidity, we enter here, and let's see what happens next after this one. And market hit our stop loss right here. So why this thing happen here, and why after hit the stop loss, what are you planning here? Let's switch back in a 5-minute time frame to see exactly what happening here. In this case, we can see here in a 5-minute time frame, market taken out the previous structure high, which one is here. When market taken out the liquidity previous high right here, it means the probability is here that market looking for the reversal. Even if you can see market taken out the already 4-hour time frame liquidity in a sell side, and market rapidly push higher, and later what happened here, market create one more opportunity to enter here at this point right here, and we enter here as per plan. And later what happened, market turn into bullish to bearish. But if this thing happen here, in this case, if market taken out the liquidity, sweep this one and market close below it, it means the probability is here we can switch back here in a lower time frame and find the sell setup entry right here, because price already trading below the baseline. Where is the next PY in a 5-minute time frame? We can see this is our entire zone act like an order flow right here, because this is single leg move right here. Once press tap on it, and we can mark them as a higher time frame PY. Once press tap on it, and we can switch back here in a lower time frame, then we can get entry. Yes or no? Let's see. In a 5-minute time frame to 1-minute time frame, we can see here the structure, market trying to push downside, continue falling and downside. This is our last structure which taken out the liquidity, and market later what happened, trying to push downside, again push downside, and this process still continue in a downside right here. This is the first area when market taken out the liquidity. Once market taken out the liquidity, we have two choices here. First one is here, once price tap on PY, we can directly sell. Otherwise, if there is no PY, we can also sell, but we need to wait for it to taken out the investment. So this investment taken out, either taken out the investment, so we can also plan for the sell after broken the first structure. For example, here, this one is a small pullback right here, again go higher. If market turn here like this one, so we can sell here. And the next probability is here that if market continue go higher, to mitigate this unmitigated order flow, so we can plan here for the sell in a downside right here. So basically we have a two choices here for the sell. Let's see what happens next here and how price react here. Once price tap on it, we can also plan here for the sell. This is our high probability zone for the sell, because this zone grab the liquidity. That's why this become high probability. And the next thing is here that if market taking out this one and break the first pullback is here, which one is here, because after taking out the liquidity, if market break same pullback is here in a same time frame, so we can get entry here for the sell. So let's see what happens next after this one and how price reacting here. Market broke it and candle close below it. So once market close below it, and we can take entry here, put the stop loss just off the high. And where's the target? Target in this case we can set based on previous structure. Look at this one, this is the bottom to top right here. So you can set the target right here and you will get almost 5 RR. So this is our entry, and this is our stop loss, and this is our target. And reason behind this trade, we can see the previous higher time frame liquidity sweep here, take this one pullback mitigation, and lower time frame confirmation here, and we can take entry here for the sell. So let's see what happens next after this one. Okay, market trying to go downside, and market rapidly push downside right here, break this low. Okay, so once market break this low, what are you expecting here? We are expecting that this entire zone taken out the liquidity right here. It means this area become our high probability zone, and we can add one more position here for the sell. But which point we can sell? This is an important thing is here that if you wish to sell here, so without inducement we can enter here. So this high act like inducement, so we can take entry here for sell, but just above it there is no PY is here, but this entire zone already grab the liquidity, so the chances is here. Look at this one. So once market grab the liquidity right here, this zone entire PY, and we can sell right here. It means the probability is here that market can push downside after mitigation this zone right here, which is already mitigated here. So we can refinement here. If price tap on this unmitigated order flow, which one is here, so we can add one more position here, because we are also in a safer side. So we can wait for it to mitigate this zone. If price mitigate this zone, so we can enter here for sell right here and put the stop loss just above the previous swing high, not this one, because this can be anytime sweep here. So you need to put the stop loss just off the previous swing high, and target should be same right here. And let's see what happens next after this one and how price reacting here. We can see here how price aggressively push downside, just following the structure in a higher time frame to lower time frame. So this is exact process that how we can take entry in a bullish market, following the previous 4-hour time frame candlestick in a continuation pattern and reversal pattern. When market looking for the reversal, then how price reacting in a 5-minute time frame to 1-minute time frame, And same thing applicable in a continuation pattern. When market going upside, then what will be processed for the buy? We can see here we got a buy entry here and hit stop loss. Later what happened to take profit hit here in a sell side. So you need to think in a both side probability when you're looking for the buy and sell, because if market create a strong bullish candle, it doesn't mean that next day market will be bullish. Chances are 50-50%, but you need to identify in a lower time frame confirmation, then you can take risk based on lower time frame confirmation, because the previous day bullish candle we have a, and same thing applicable in a bearish market. If market momentum is a downside and continue falling and falling, then market create any kind of like bearish pattern, so we can plan for the sell. And same thing applicable for the reversal. If market momentum is a bearish and create any kind of like bearish pattern, so we can looking for the create any kind of like reversal pattern, so we can plan for the buy to the upside. Now I'm going to show you a few more example to understand how it work in a bearish market. Let's see. In this structure, we can see how price is reacting here and what we are expecting next here. In this case, generally what happening here, if you can break down, previous candle high is taken out, which act like a liquidity, means the previous high is taken out, which is indication that market looking for the reversal in a downside. Next time what happening here, market again break it, and we can also plan here for sell after lower time frame confirmation. We can sell here based on 5 minute, 2 minute, even 1 minute time frame. And later what happened, we are also looking here for sell right here, but this time market create indecisional candlestick formation right here, so we are not able to sell here. If market create here any sell opportunity, so we can enter here for sell. Later what happening right now here, and what we are expecting next here. For example, here this is our previous swing high, this is our baseline of this candlestick here. It means if market close over it and create here any bullish pattern here, so we can plan for the buy to the upside. But what happen here, if market not able to create any bullish formation here, so we can plan here for the sell in a downside in a 5 minute time frame to see exactly what happening here and how we can take entry here for the buy and sell. So this is our 5 minute structure, and we can see here this is our baseline right here. This is a 4 hour time frame candle close here. Again, this is an indecisional candlestick formation right here. So what we are expecting here, we are expecting that if market trade below the baseline, we are looking for sell. If market trade above the baseline, so we are anticipating market looking for the reversal, because momentum is a bearish. Market continue falling and falling, just taking out the previous 4 hour time frame candlestick high, and later what happening, market push downside rapidly and again push downside right here. In this current case, we can see this is our candle, this one is here, and baseline is here. So what are you looking here? We are looking for the buy and sell. In this case, we can see the previous high is a sweep here, which is indication that market grab the liquidity. It means this zone grab the liquidity, and we are also planning here for sell. But if price close below it, so price already closed the baseline, it means this is an indication that we can plan here for sell. But market should be closed below this candlestick here, right here. So price close below it, it means this is an indication here that we can plan here for sell in a downside right here. So once price close below it, you need to switch back here in a lower time frame, because price trading below the baseline, previous high sweep here, even the previous structure low is a closing below it. So we can switch back here in a lower time frame to see exactly what happening here in a lower time frame, so we can take entry here for the sell. So in this case, we can see here one more interesting thing is here. First one is here that market continue falling and creating lower lows and lower lows here. It means market continue falling in a downside. Market need to wait for it to take out the investment, then we can plan for the sell right here. So in this case, two possible scenario is applicable here. First one is here, after taking out the investment, price push downside and close below it, so we can plan for the sell. For example, here this high is a taken out, which act like a investment. This investment taken out, market should be close below this one. Once market close below it, so we can enter here for sell. But again, market taking out the liquidity in a sell side, again go higher. It means we need to wait for it to mitigate the unmitigated order flow. Where is the order flow? This one is here. This is our entire zone where we can looking for the sell in a downside. This is the first step then where we can sell here, because this area grab the liquidity. So this entire zone act like a higher time frame PY, and we can plan for the sell. Either market taken out the investment, this one is here, and sweep this one, and then we can plan for the sell in a downside. So let's see what happens next after this one. We can see here after taking out the investment, market not able to tap this one and just broke it, and market close below this structure right here. So once market close below it, and we can plan here for sell at this point right here. Put the stop loss just off the high, because this entire zone collect the money in this case. Where is the target and stop loss? Stop loss should be same here, entry here, and target we can set based on Fibonacci. top to bottom right here. 1.618, this one is the first target, which is almost a 1.1 RR. This one is a not fair target, so you can extend the target 2.6188, 2.618 RR. This one is here. So you will get almost 3 RR in this trade if market hit our take profit right here. So I hope everything is clear till now. What the logic behind this trade here? The previous high is a sweep here, market trade below the baseline. In a lower time frame, structure also taken out the liquidity, push downside, close below it, and we can enter here for the sell. Let's see what happens next after this one, and we can see how price rapidly push downside. Again, what happening here in this case, we can see market again break the high. Again, if market close below it, so we can looking for the sell in a downside. Let's see what happens next after this one. Okay, we can see here market completely close below it. So once price close below it, this is our order flow. It means this area grab the liquidity, so we can enter here for the sell right here. Put the stop loss just off the previous high, and target we can set the previous this one. I like this here. We can add multiple position. Look at this one. This is one more entry execute here, and later what happened? Market hit our take profit right here very smoothly. So this is a complete process that how we can take entry in a bearish market when market taken out the previous structure high and close below the baseline, so we can find in a lower time frame entry after creating strong this bearish candlestick formation here. What are you looking here? We are again looking here for the sell because there is no still bullish confirmation here for the buy. But in a lower time frame, if market create here any reversal confirmation, so we can take entry for the buy. But right now we can see here this is our candle closing right here. So if market create any bearish pattern below this baseline, so we can plan for the again sell in a downside. Let's see what happen next here in a 5-minute time frame. In this case, we can see here this is our baseline and price trading below the baseline and market close below it. So what are you expecting here? We are expecting here one more thing is here the previous high is taken out, which act like a liquidity is here. Once market taken out the liquidity, and we are expecting that we can plan here for the sell because momentum is showing bearish and price should be close below this one. This is our previous structure. Once market close below it, we are looking for the sell right here. So price close below it successfully, and now we can enter here for sell. We can directly sell based on 5-minute time frame, and also we can use 2-minute and 1-minute time frame. And lower time frame totally depend on you that which time frame is suitable for you. For example, if you are looking here for sell based on 5-minute time frame, we can directly sell here, put the stop loss just off the previous high, and target we can set based on the previous candle height. The previous candle height was here like this one, so we can set this is a target for the next trade right here. So this is our entry, and this is our stop loss, and this is our target. You will get almost 2.5 RR. Okay, so when you switch back here in a lower time frame to see exactly what happening here in a lower time frame, we can see here that there is any kind of like entry possible here. So right now we can see here market pushing downside, market continue falling downside right here, and you need to wait for it to taken out the inducement, then we can add entry for the sell in a downside right here. We can see here price again broken here, taken out this inducement here, and this entire zone act like a PUI. Once price tap on it, and we can plan again sell right here. So this is our entry, this is our stop loss, and where's target we can set right here as per the previous candle height, which one is here. And also you can extend the target using Fibonacci tool, top to bottom right here. So 1.618 is target and 2.618 is target, so we can extend 2.618. This one is our final target right here. Okay, so this is a process that how we can get entry here. Process is very simple. Market taken out the liquidity in a higher time frame, then we need to switch back here in a lower time frame, then we need to wait for it to taken out the inducement and wait for it break this one mitigation, and we can plan here for the sell in a downside. So let's see what happened next after this one and how price reacting after this one. We can see here how price rapidly push downside and hit our take profit. In this case, we can see here again market break this high, but unfortunately this is not a inducement. But if market create this pullback right here, for example like this one, then go higher and taken out this one, so we can mark them as a PY and we can plan for sell. But this is a counter move like this one, price go higher like this one, so this is not an area when we can take risk here for the sell. And later what happened here, market push downside and rapidly push downside, and market hit our take profit right here. And when market finally hit our take profit, you can get almost in a based on 5-minute time frame 3 RR almost in a lower time frame, in a 1 minute time frame, you will get 4.5 RR. So this is the difference between the risk reward in a higher time frame to lower time frame. You can execute the trade in a higher time frame also, in a lower time frame also, and this is a completely depend on you that this time frame is suitable for you. You can trade in a 5 minute, 2 minute, 1 minute, any time frame you can trade in a bullish market, in a bearish market, and how market looking for the continuation, what pattern, and how market looking for the reversal and continuation. Everything is a clear till now in a bullish market, in a bearish market. So I hope you enjoy it entire chapter, that how we can use 4 hour time frame candlestick and lower time frame anti model. You need to backtest and you need to practice on your chart before to apply on a live market. First you need to backtest, and maybe in starting look like complex to understand. Once you understand this one, then it look like very easy to trade. You can trade anywhere, any currency pair. So in this chapter enough for the day, and I will see you next chapter. Happy trading.